Hey, I'm Dan Fitzpatrick here at StockMarketMentor.com, and it's Saturday, February 28th. First, I want to mention to you that I'm going to be speaking at the Invest Like a Monster conference in Las Vegas on March 13th. That would be Friday the 13th. It's a two-day event. I'm speaking on Friday, and I just want to invite you to show up. It's going to be a great event, particularly since I'm speaking, by the way. And you can just go over to the Option Monster website and register for there. But I hope to see you there. It's going to be a great event. Love Las Vegas and love the guys at Option Monster. So hope you'll check that out. Okay, eyes, Second Sight Medical Products. Here's the thing. A couple things on this. Okay, the stock had been trading in a volatility squeeze for a while. By the way, this is one of the things I'll be teaching over at Invest Like a Monster. The stock gapped up and closed at 1120. That's above above the upper Bollinger Band. So that's a sign of strength. That's called a power move. Let me show you here. Okay, this is what it looked like. Look at the massive volume here. This is institutional buying. You're not going to get over 5 million shares traded by Jethro, Billy, Bob, and Jake while they're not out fishing for largemouth bass. This is large institutional buying. So you've got the stock that breaks out like this. There is going to be a continuation. That's just the way it goes. So you get the continuation here on the second day, and then you say, oh crap, well the third day, okay, that's it, that's the end of that thing. Not necessarily, as we can see here. But here's how you trade the last part. The first part is, when you see this, when this comes up on your scan, which I'll talk about at the Invest Like a Monster conference, when this comes out on your scan, you want to be long this stock, particularly if it trades above the high of 1164. So you can set your alert here. You see this, you say like, crap, too bad I was working today. I didn't see this move. But if this stock looks like it's going to continue, so if I can get this at a high of, if it starts trading above 1164, which I think it will, then I'm going to go ahead and buy some stock. So you set a price alert for like, I don't know, 1165. So you can see, so you can have your attention drawn to it when the stock starts trading above that level. And if it trades above that level, great, you're in. Boom. The next day, you're in 1165. Yippee, you're up 20%. Okay, so you're still long the stock, whatever. I'm not talking about the third day right now. I'm talking about the way you get in on the second day here. What you're going to do with this depends on you. So we got the third day now. The stock trades down, and so a lot of the folks that bought here are saying, I got to get out of this thing. It's time to dump it. Fine, so the stock pulls back, but it's actually an inside day. You see, it's an inside day. This was the prior open. This was the prior close. The entire trading range here is inside the prior range between the open and the close. So it's an inside day. It marks indecision on the parts of bulls and bears. So what can you do? So we've had the one trade. See, these are two different trades, but it's the same technique. First one is you missed the first day, but you didn't miss the second day. Okay, you set your price alert. Stock's up. Whether you're in or out at the end of this, frankly, if I'm trading short term like this, I'm pretty much out after 20%. I would have been selling into the end of the day just out of a lack of greed. And then on the third day, this pulls back. So now let's say you missed these first 2 days. You're new. You're just coming into this. Now what the heck am I going to do? Buy it 12 bucks? No. Actually, that's not the trade. The trade is to look at the high again. 1475. Set your price alert at 1475, 1476, 1477, something like that. If the stock continues lower, then you're right not to buy it. However, what did it do? Okay, it gapped up slightly and then ultimately eclipsed this last high. Game on. Bulls are in charge again. Okay, so you're up another, or let's say you're initially, because you're new to the stock, you're up 10%. Of course, you could say, well, why not just buy at the open, Dan? Well, if I could go back in time, I would buy at the open. Actually, I'd have sold everything that I owned, raised all this cash, and bought right here if I could go back in time. But I can't. I don't get to do that. I have to trade what's in front of me. So I look at these first two moves, and I'm thinking, okay, now this third move, I got to really be careful of this stock. You don't want to just go pile in because it gapped up a little bit. You want to wait for clear evidence that the stock's going to continue to move higher. Now, hopefully, here's your third trade. Okay, so the first trade is I missed the first day. I'm in on the second day. The second trade is, crap, I missed these first 3 days. I want to be in on the fourth day, and there you are. The best trade is if you are already long and you see this move, and you start to take a little bit off the table, but not everything. You sell it in scales, and now you're up on some of your stock, up basically almost a double. So you were right to let some go. You're right to hang on, and if the stock if the stock just continues doing what it's doing, then you're still right to hang on. So anyway, that's it for this video. I hope it helped. 3 different types of analysis here. So I'll see you next time. Members, over to the strategy session. A lot of member requests I'm going through, and also we're going to cover that Lululemon squeeze that I've been talking about for the last few weeks. It's working.